Hello, everyone, and welcome to our next session in the DMI Symposium. I hope you've been enjoying the day and a half of virtual meetings that we've been having, some great discussions, and I think this one is going to generate a lot of interest over the next hour or so. Our topic is data and digitalization towards a new digital economy. This is clearly a huge discussion point, and we're really lucky today to have people representing both the private sector and the public sector to talk about what is undoubtedly a hot topic. And it's a hot topic because it needs to be discussed. It's also a hot topic because there is heat in some of the conversations when it comes to use of data, collection of data, application of data, the role of regulators, the role of the private sector. And these are issues that we're going to address today with our speakers. We're going to look as well at digital ID. We are unashamedly going to have a little look at where there are positive uses of data and how that can be enabled for the greater good of economies, societies as a whole. And I think those are important discussions to have. Our speakers we're very lucky to have a fantastic group of speakers with us today. We have Valentina Eon, who is Director of Government and Industry Solutions at Microsoft. Welcome, Valentina. We have Ed Bowles, who is the Global Director of Public Policy at Meta Financial Technologies. Hi, Ed. We have Douglas Arnott, who is the Kerry Holdings Professor in Law at the University of Hong Kong. And Doug is also, I'm pleased to say, a member of our Digital Monetary Institute Steering Committee. Welcome, Doug. We have Molly Mahar, who is the Senior Associate Director at Division of Supervision and Regulation at the Federal Reserve Board. Hi, Molly. And we have Kate Turner, who is the Chief Digital Identity Advisor to the US Treasury. Welcome to you, Kate. Just a couple of things for you to note. We will be taking questions. Do please put them in the chat function. I'll be keeping an eye on them, and the good ones we'll bring to the panel. So I'm sure there are many questions out there for this great group of people. So please do that. At the same time as we're doing this panel, we are launching an OMFIF report on data and its use. It's called Data Towards a New Age of Economic Enlightenment. It's a project we worked on for close to a year. We're very proud of. You can go to the OMFIF website to download it. You can, I think, go into the chat function. You'll find a link of where to download it. We spoke to more than 25 global data regulators for that report to see where there were common interests, common goals, common approaches. Clearly, a lot of work needs to be done. One of the things that we certainly thought was that the more people talk, collaborate, work together between public and private sectors, the better outcome we will have for everyone. So that's going to be the core of the discussion that we have today. We also have a poll going on, 2 questions which you can have if you go into the poll function. One about regulators and whether they can work together to successfully create a global landscape for the enablement of data and strike the right balance between privacy issues and beneficial use of data. And also one on digital IDs and whether they're the key to unlocking the potential of data to transform business and economies. So those are polls. Do please answer them. And some way through the panel, we'll have a look and see what the audience thinks about those questions. So I'm going to start with a broad opening question, which I'll address first to both Molly and Kay as the regulators that sit with us today. And I think it's important to get their views on this first. We live in a time where we generate more and more data and we live our lives online. And there's no doubt that there is a tension between efficiency in the market and the imperative to maintain privacy. So how are regulators approaching this tension? And also, how can companies generating and collecting that data provide assistance to these regulators? I will come first to Molly, please, to speak on that.
Great. Thank you, Clive, and thanks for having me here today. I look forward to the discussion and to learning more myself as we go through various questions. I guess I'm sure Kay can talk more specifically about things around digital identity, but just to give my perspective, a bit of a broader perspective and potentially more narrow from a bank regulatory perspective. I think as we look at the availability of data, certainly we're seeing a really large expansion in kind of the ability to customize products and expand product offerings for financial institutions to reach more clients. And, that creates a lot of sort of new products. How might we, from a regulatory perspective, kind of approach that? We would certainly be looking at kind of understanding what's happening and having a deeper understanding of the products, but also, of course, the risks. And you talked about the tension with privacy. I would put on that list security, which is sort of a close cousin, if you will, as well as kind of third third-party risk management, which I think is an important part of this discussion, particularly for financial services companies that are engaging with others, as well as the sort of look at the data itself and kind of appropriateness and all of those considerations would be the normal things regulators would be thinking about in terms of balancing kind of the innovations and making sure there are controls in place. I think the other thing, the good news is that the innovations with technology and data availability have also created opportunities in the risk management area for better tools around managing risk, around being able to measure risk. And so, that is something else that is sort of coming to fore with the availability of data that's important as we think about, kind of both what's happening as well as the appropriate types of risk mitigants that might be in place. We, of course, look at this and across all of our work in monitoring and examinations as we engage with the industry. And I think because of the innovation and the change that we're seeing, we certainly aren't taking a one-size-fits-all approach to this. I think we're trying to really deeply understand the benefits, the products, and the potential range of risk mitigation that can occur. You asked, Clive, also about sort of how can the industry help regulators? I'm not sure if it's directly responsive to sort of help regulators, but I do think it's really important, as innovation progresses and we have so many kind of different things going on, that the risk considerations around privacy, around security are really embedded at the beginning in the design phase. I think that's where kind of we can make advancements towards the kind of responsible innovation I think we all support is by kind of thinking about those things early and often. Certainly that's the way we as regulators would be thinking about it. So with that, maybe I will turn back to you, Clive, or turn to Kay.
Yes, please, Kay. Thank you, Molly.
Thank you so much, Molly, for those comments. Thank you, Clive, for the opportunity to come and talk. Yes, I'm in the Department of Treasury. I'm actually in the Financial Crimes Enforcement Network, or FinCEN, for those that don't know. We are the primary administrator of the Bank Secrecy Act, so the anti-money laundering, countering of financing of terrorism regulator. We're the primary administrator. We work with other federal regulators like the Federal Reserve in terms of implementing the rules and reporting requirements. We also cover the entire financial sector. And when we think about data, our data is identity. And I wanted to just give you a bit of context in the way in which we think about it, which is slightly different than the way Molly, where she sits. So FinCEN's mission is to protect the US financial sector from illicit finance. And identity is pretty much at the heart of that. It's fundamental to any bank's anti-money laundering program that they need to put in place. And I'm actually in a new role that they brought me in last year, and they've given me 3 tasks. I'm supposed to look at, within the construct of FinCEN, what levers we have to advance the use of digital identity. To your point about partnering with other regulators in the private sector, my role is to go out and partner with other federal regulators and also federal agencies to see how we can advance use of digital identity within the construct of FinCEN's mission, and to go out and educate, because a lot of people don't even really know what to think within the US context of what a digital identity is. And so when I think about digital identity, I know that it's got a much broader remit than this kind of AML, CFT lens. There are obviously implications on privacy, security across all sectors, right? Not just financial services. And within financial services, as Molly mentioned, a much broader set of issues than just AML, CFT. Heck, we know that a digital identity is the fulcrum with which you can port data from one silo to another. But I wanted to tie it back down to FinCEN. And so our regulations and our reporting requirements are all set up to bring identity into the system, because they were mainly designed on the backs of the terrorist attacks in 9/11. And at that time, we only had a static analog identity. And it's important, the mission in terms of bringing identity in is to counter bad actors from using the financial sector. And so this is true for regular depository financial institutions, money service businesses, or emerging digital asset products. And it's clear that digitally native financial services, including digital assets, present a challenge to that patchwork of credentials and identifiers in the US system that are at the state, the local, and the federal level. They're much better for those plastic and paper-based identities, are much better for in-person presentation. And we know that combined with uneven implementation of IT standards, which has led to data hacks, that the information that the private sector relies upon in the absence of digital credentials, it makes it very challenging to prove who you are in a digital world. And the bad actors are benefiting from it. And I sit in the seat of thinking about not just, preventing bad actors, but also thinking about innovation. So we're very encouraged to see an emerging set of digital identity infrastructures from authoritative sources, which benefit from that permanence of identity wherever you are. So that could be the Social Security Administration's attribute validation service. We've got states which are rolling out mobile driver's license. And we've got the Department of Homeland Security, which is looking at immigrant cards in a digital form. So there's a whole set of infrastructures that we're very excited about, because we know that our regulations, our reporting requirements, as well as identity systems need to evolve along with these threats. And we believe, to your point about working together, that we could foster the development of infrastructure, information sharing, and standards to safeguard the identity of the individual and the financial system. And just some of the examples of, this partnership that we're looking at across is that recent examples are, we hosted a digital identity tech sprint with the FDIC. And we were looking at how to measure the effectiveness of digital identity proofing. We have a long-standing Bank Secrecy Advisory Act group where we've got the private sector working with us and other regulators to think about key topics. We have subcommittees that have been looking at digital identity, either from the information technology side, or we had a completely dedicated group towards digital identity and eKYC. Thinking about for a year how you advance that. Innovation hours. We hosted innovation hours where we invited entrepreneurs to come in October, and we had an outstanding response from the private sector. There are lots of different solutions that came and presented to us and the other federal regulators. But more importantly, we've had in December 2020, Congress passed the Anti-Money Laundering Act, which calls upon and codifies the fact that we need to work with the private sector in order to have this positive feedback loop to think about the fact that we're all going digital and we need to make sure that we have the infrastructure in place equivalent to what we have for in-person presentations.
Thanks, Kay. And we'll come back to some of those issues around digital ID a little bit later. It's very interesting what you said around financial services, and Molly as well. It's always been the case that, regulators in financial services, sometimes they struggle to keep up with big banks, huge institutions moving fast. These are complicated, complex issues. In some ways, it's the same with technology companies, I would imagine. But I know that these technology companies represented here today want to work very closely with regulators and find common ground. So Ed, maybe I could come to you next, just to, what's Meta's position in terms of working with regulators like Molly, like Kay, and so forth, and what are you getting right? What are they getting right? What could you do better?
Golly, lots of leading questions. Or perhaps I'll come to your first question last. But if I can open just by congratulating OMFIF on the report that's come out today. It's a compendious piece of work. It runs to about 78 pages. I read it on the flight in from Rome this morning. And what it shows is incredible divergence and a high degree of protectionism, in fact, by quite a lot of countries around the world. They dress up data protection as a means of trying to preserve onshoring of data, for example, as a classic example of controlling what goes on in those markets. And it seems to me that we're still quite a long way from having anything like, for example, the EU-US transatlantic data transferring arrangements in place, remotely reflected anywhere else in the world. And I think it's progress in that direction that really needs to be made. There have been one or two other examples of where that sort of progress has been made. I could draw attention to the UK-Japan FTA, where for the first time there was a dedicated digital trade chapter, which talks about effectively prohibiting data localization requirements. It talks positively about basically presuming that data portability is something that would be enshrined and protected within that agreement, and subject to very few national security type exemptions. Basically, regulators shouldn't be crossing the lines of those new standards that are written into that chapter. So I think there are some good examples already moving in the right direction, but we are a long, long way from anything like a sort of global set of standards or rules that really enable sort of cross-border activities commerce-wise to work. Why does this matter when you drill down particularly into some of the issues that Molly and Kay have been talked about? Well, the other end of the lens from KYC and AML is financial inclusion, right? There are 1.7 billion people in this world who still don't have access to bank accounts or any material form of financial services. About 1 billion of those don't have any formal identity documentation either. And that's where I think there are some real opportunities for digital IDs to make a degree of progress, because quite a lot of that billion, indeed the vast majority of the billion, do have mobile phones, and they have social media accounts, and they have means by which they have documented digital activity already that can be aggregated. And one of the things that we're really interested in as a company as we move forwards with our work on the metaverse, or at least our bit of the metaverse, because we're not going to build the entire thing, but we have already built Horizon Worlds and Horizon Forums, which you can enter today through an Oculus Quest 2 headset if you want, and you can see little avatars walking around. I say walking around, there aren't any legs on them at the moment, they're moving around without legs, but I mean, I have an avatar that's in there, and that is a form of digital ID that has my identity already on it. I can talk to people, and this is very cross-border, from other countries who are in the same space at the same time. And at some point, there will be payments enabled within that world. And then as we move towards a degree of interoperability between our first-party world and other bits of the metaverse being built by others, we will want to enable portability of digital assets. We want to enable portability of payment mechanisms. We want to enable portability of digital IDs, on all of those within a digital wallet. And those will need to meet some fairly rigorous standards that Kay and Molly will no doubt want to see as part and parcel of that sort of activity, but at the same time will be a real enabler of greater e-commerce, cross-border, and not trapped by the protectionist sort of approaches that the report that you published today identifies as being a very real impediment to further investment opportunities.
Thanks, Ed. Lots of things we'll go back to there over the course of the next 45 minutes or so. Valentina, maybe I could come and ask you from Microsoft's point of view, this tension between regulators and providers and the ability to move forward with what you think are important things like Ed described.
Thank you very much, Clive. And in the past, indeed, the discussion has been around the trade-off between privacy, security, and even value creation. At Microsoft, we believe that these three policy objectives can be achieved simultaneously through technological innovation, such as confidential computing, artificial intelligence, and cryptographic algorithms and protocols powered by quantum computing. So we shouldn't renounce that one versus the other. They all can be fulfilled. And as we work with commercial and central banks around the globe, we find that these three steps help us advance at every stage. Industry standards and common data models, investments into data discovery and classification, as well as skilling at every organizational level, both on the private sector and on the public sector. There is a lot of information already that has been collected and regulators across the wider government have. maybe it can be put at better use, at better exploitation through such tools that I've mentioned. And ultimately, cooperation within the ecosystem powered by portability, as we've heard, and interoperability. Government consulting with the private sector, and not only consulting, testing together the capabilities of technology. In the metaverse, very complex systems can be put at test before implementation into the physical world. So this would be the perspective we take on it.
Thank you, Valentina. Doug, I'll come to you now as the neutral observer here to get your thoughts. There's a very good paper that you and some colleagues wrote recently around data, around the transnational nature of data and whether there can be a regulatory global level playing field in any kind of way. And I think one of your conclusions is maybe that something like a digital stability board might be an answer. But talk us through where you see the tensions and also where you see there maybe some potential solutions to those.
Thanks a lot for that, Clive. And great to be back here again. And congratulations to OMFIF on both the new paper and another great symposium. You know, I think I wanted to draw together some of the themes that we've all been talking about. And really, if we think about this context of data and finance, it's an interesting one because if I think back 5 years ago, no one really thought about data protection in finance. And that really all changed around 2016. Why? Because suddenly we realized that MiFID II was coming in, that GDPR was coming in. These things had extraterritorial impact. And basically, suddenly we had to start thinking about the way that we were storing data, the way that we were controlling the use of data, and in the MiFID context, the way that we were delivering data on a very large scale to regulators. And I think that one of the challenges with finance is that unlike the internet or a traditional data industry, finance historically is an analog industry, but it is an industry that today is probably the most globalized, probably one of the most digitized, and certainly one of the most regulated. And this all comes together into a range of challenges. And I think if we think about data in finance, we have to think about it from both the standpoint of personal data, but also non-personal data. In other words, when we're talking about data protection, most of the time outside of finance, we're talking about personal data. But in finance, much of our regulation around data is actually around non-personal data. In other words, standards for data, standards for disclosure, data reporting requirements, data storage requirements. Think about something like OTC derivatives, where we spent a lot of time in the aftermath of the 2008 crisis trying to come up with standardized systems for disclosure of information and reporting frameworks. This is digitization of data, and lots of lessons from what didn't run well in that process. But when we look at finance, the challenge is that we're looking at a variety of different regulatory objectives, as Molly pointed out. And I think we can think about the privacy objectives and some big differences in privacy approaches between, say, the EU, the US, China. Fundamentally different and in many ways conflicting approaches to personal data. Second, efficiency, a common interest across most jurisdictions in supporting efficiency and supporting development and supporting inclusion. And as Ed said, we've realized that there are tremendous benefits in data aggregation. But the question is, how do we get the benefits of data aggregation without data exclusivity and dominance? And that is a huge policy question right now. And that relates to the other 2 points that I think Molly has highlighted. The first is that when we think about financial stability, when we think about national security, today, data is very much at the heart of both of those questions. And that means that from a regulatory standpoint, both from a financial stability standpoint, as well as a national security standpoint, we're looking at this in a very different way than we were a few years ago. And that finally plays out in this idea of countries are thinking, how do we go about maximizing the benefit of data for the competitiveness and development of our country? And as a result, increasingly you find not only different approaches, but in some cases direct competition and conflicts in those approaches between different countries. As a result, I think when we are looking at this area of data in finance, it's something that when we think about finance today, almost everything is data. $6.5 trillion changing hands in the foreign exchange market. Digital, almost all of that. That is data. Securities transactions in the traditional securities market. Almost no paper-based securities left. That is all digital. That is data. And of course, if we are thinking about digital assets, and then we finally get to personal data and ideas of things like open banking. How can we maximize the value of that data? So I think what I wanted to highlight here was really the complexity, not only the recognized potential advantages, but the fact that we're seeing some real emerging conflicts in different approaches.
Thanks, Doug. All very good points. I thought it was interesting, Kay, when you were talking earlier, obviously an awful lot of liaison and discussion within the US regulatory bodies. But what we're talking about here, of course, is a global phenomenon. And we have two people here representing US headquarters company that are active in every country in the world. So to what extent are you also, as well as talking within US authorities, also looking at what's going on elsewhere in the world and having discussions with other regulators?
We are. We are discussing within the US regulators, thinking about it, but we're also reaching out to other jurisdictions that we have. There are 4 of the 5 I's that are either on their first attempt or a second attempt in terms of digital identity frameworks. And so we're looking and trying to think about lessons learned. Those that may have attended the FedID conference in August last year, I ended up inviting the Australians and the Canadians to come and give a lessons learned panel. I think we're very much in a listening mode and trying to understand. Obviously, digital identity is a much broader issue, and FinCEN is one of many bodies within the broader US government. But we certainly are trying to understand elsewhere. For those that don't know, I started thinking about identity about 2017 when I was asked to work on India and then throughout Asia. So I've spent a long time thinking about it. And clearly, if you look at my background, you'll know that prior to June last year, I did not wake up thinking about anti-money laundering and countering the financing of terrorism. They brought me in because they wanted me to think about how could we, as an agent, as a bureau, think about within our remit and then across with other partnerships. And I think it's in a listening mode, and that's why we have all of these forums for discussion, and we're reaching out and making sure that we can understand, because I don't think that anyone thinks that as an individual you can solve this. Identity is a network business, and it's going to take the creativity and the intellect of both the public and the private sector working together to solve it. So very much to your point, yes, we're happy. So if someone wants to reach out to me, I'm always in listening mode, and we're always looking for suggestions, both from the public sector and the private sector.
And equally, whenever it comes to any global regulatory standards, often people look to the US, certainly in financial services and the banking industry. Molly, same question in a way to you in terms of your liaison with and collaboration with other regulators, and whether there is a desire among regulators to create some sort of global level playing field.
So great question. I guess a little bit just kind of bringing in some of the themes that others have talked about here. I think this is a sort of complex, multifaceted problem we're talking about. Doug talked about how financial services data is not just about kind of individual data privacy and portability, but about kind of all of the data used and models and risk governance and transactional data and how we keep all of that secure. So there's a whole range of issues there. And then I think he touched on a lot of issues that go, of course, well beyond what the Federal Reserve's mandate is, or even what Kay and her colleagues at FinCEN and Treasury are doing, but require a kind of whole of government approach, both within the US and I would say internationally. Now, we do work very closely and continuously with our international counterparts from a bank regulatory perspective on a regular basis. These issues and other issues related to kind of potential regulatory fragmentation are always top of mind and always under discussion. The sort of principle of same risk, same regulation is really the bedrock of kind of how we approach our international discussion. So, I would say there's a lot of discussion going on, but I think it is also complicated, not just by the kind of breadth and the number of people involved, but also that this is evolving rapidly and changing rapidly, and the possibilities are opening. And so kind of striking that balance, and also understanding that different jurisdictions are reacting to different things potentially that are happening within their markets. All of that sort of creates a time element to kind of coming together internationally and setting those standards. And I guess the last thing, since we were on kind of a public-private kind of orientation on this panel, I do think there's opportunities there also for the private sector, standard setters, to really be making efforts along those lines. I think that there's good interaction there, and that those kinds of standards and good practices do help over time create that kind of consistency across regulatory frameworks.
Thanks, Molly, and thanks, Kay. Valentina, so slightly over to you. What is the private sector? Obviously, one of the issues that we talk about a lot when it comes to data is accountability, and I think that's something that big data providers and big tech companies are very, very, very keen to focus on. How is Microsoft approaching this?
For us, the respect of privacy, it's paramount. We, as a global platform, cloud computing platform provider, we could not operate without the respect of these requirements. And not only looking at privacy, but also looking at artificial intelligence and the ethics of any solutions, automation of systems that will rely on artificial intelligence. It has to happen for the good of the humans and on the society. So we have strong governance committees, and sometimes we get questions on why we are not active on specific fields. If we're not there, it's that we're guiding ourselves on higher grounds of privacy and respect of the human rights. Now, looking through the lenses of technology provider, we've seen two approaches around the globe. Countries that are building comprehensive standards and taking the lead in influencing how the national and global market operate, and countries that are focusing on specific use cases, on the more immediate needs, and harmonizing existing standards around these scenarios. In the first case, change management and adoption should be properly considered. Without the right investments and efforts put at into these two aspects, the risk of failure or the cost of making it work, it's too high. In the second case, looking at specific scenarios, legacy, it's a challenge. And at the same time, the big opportunities, there are interoperability and portability. And if I were to summarize a bit the risks of allowing for a fragmented regulatory approach, knowing that we are exposed to the world, to all of the countries that we've been closely working to date, the points of failure and attack multiply in a fragmented, siloed environment. Bad actors, as it was mentioned before by Kate, will exploit the gaps. The cost of governance, operation, and remediation, it's higher. And then the speed to market, it's slower. I mean, even for governments, we're speaking about country competitiveness and financial inclusion at the same time, and they will be impacted. I have always in mind this indicator from World Bank, Ease of Doing Business Index. And we've realized that countries and organizations and government that have embraced digital transformation and cloud computing and technology innovation tend to score higher.
Thanks, Valentina. Ed, just to come to you now. I mean, similar thing. I know that accountability, responsibility, very front of mind at Meta. Do you get the sense that if you can demonstrate that, then what seem to be at the moment lots of regulatory red lights might turn amber or green?
That assumes they're red in the first place. Look, I would say one thing that we're seeing, for example, in the EU in relation to the application of GDPR is actually a degree of breakdown of what was the one-stop shop principle approach, which for an entity like us that supervised across this particular region, we thought that was a particularly important innovation, so that everybody knew that although there are local, obviously, data protection offices in member states, there was nonetheless at a supervisory level across the activities of one firm, a particular single supervisor who would take the lead in dealing with any sort of accountability questions, investigations, and those sorts of issues. And we're certainly seeing some challenges to that by member states. And there is, I think, a real question, therefore, going forwards about just how sustainable the one-stop shop approach will be across a sort of a multi-jurisdictional region like the EU, where people do sort of effectively cede authority to one particular oversight entity. And I think that then raises interesting questions about how there is region-to-region collaboration in relation to those issues, let's say between the EU and other jurisdictions too. There's a second element which I think is really intriguing here, and if you don't mind, I'll take the conversation more in the direction of the actual title of the conference, because one of the really fascinating debates that I think central banks are having at the moment is this issue of just how much data do they want to be having access to as they think about what technical structures and operational structures are necessary for bringing into place CBDCs. And, you've got China at sort of one end of the spectrum, where they've got highly granular personal data of individuals' transactions that they're gathering through their ECNY approach, which I suspect might seem to some people as being overly intrusive. And you've got others looking at how they can have an incredibly operational, effective digital system, but one that balances some of the concerns that Kay and Molly will have about how, what's the audit trail, what's the data storage aspects of this, how do we access that sort of information in the event that we might need to investigate something, which has impacts upon things like scalability, latency, settlement finality, a number of the other material considerations that are going into, what is going to be necessary to build a truly effective potential central bank digital currency or series of central bank digital currencies. And I think what's wonderful when you look at, for example, Project Hamilton, which the Boston Fed's doing with MIT and the Bank of England have recently joined, is an incredibly transparent phase-by-phase analysis of all of these incredibly difficult issues with public consultation, and the Fed proper themselves are engaged in a consultation exercise now, which closes on the 20th of May, if I'm not mistaken. And there are 22 questions, and they will absolutely welcome others joining in answering those questions. We will be almost certainly providing a response to that consultation. So I think there are some really interesting and, slightly tension generating discussions around just how much personal data do public authorities really want access to and to have responsibility for themselves as they look to themselves innovate to reflect the need to drive towards a greater digital economy going forward.
Thanks, Ed. Doug, thoughts on that?
Thanks for that. And I think it's a great point. And I think, one, when we think about a CBDC, the data collection, the data privacy aspect is a core design issue. And what we're seeing is, as Ed suggested, a lot of variability from country to country. And this actually relates back to some of those wider cultural attitudes or strategic approaches to data. And I think one thing that's going to be a challenge as we move ahead is really from the standpoint not only of the domestic approach to data collection and use in relation to CBDCs, but from the standpoint of cross-border access and use. And I suspect that this is going to be one of those areas where the starting position is very solidly going to be one of localization. I suspect most central banks setting up central bank digital currencies will fully establish systems that basically try to keep control of that data in the individual jurisdiction. There will be, and if we think about, I think, Molly's point about this idea of the challenges of data cooperation and the need for a whole of government approach, we also see this at the global level. And in the context of finance, we have a long history of systems, the IOSCO MMOU, for instance, for sharing data on a cross-border basis amongst regulators. So I'm fairly optimistic in the context of finance that there is potential from the standpoint of regulatory cooperation, even in the geopolitically difficult jurisdictions, as we're seeing in the context of the China-US audit papers discussions. There are possibilities for regulatory cooperation. I think, however, once we get to general data cooperation, I think as Ed was highlighting with the US-EU negotiations, those are only likely to get more and more difficult going forward.
Thanks, Doug. Let's talk about, I think one accepted area where there would be broad agreement that better collection, aggregation, and use of data would be of huge benefit to economies and society, and that is financial inclusion, that Ed mentioned earlier. And one of the regulators that we spoke to in our report said very clearly, financial inclusion cannot be achieved without necessarily collecting, processing, sharing personal data, which complies with our central bank policy on customer due diligence. Ed, if I can come back to you, how big is the opportunity here, and what needs to change and what needs to develop to get there?
I mean, the opportunity is huge in terms of bringing more people within established economies or functioning economies, as opposed to being on the receiving end of cash remittances or living in a purely cash society. And I think, if you think about scaling that up, of course, you would then enable those people to be contributing through tax and other forms to the wider benefits of their societies as well, and becoming much more integrated within systems as a whole. So, if you take the figure of being 1.7 billion individuals without any formal bank account and 1 billion of them having no formal ID, it's really significant. Now, there are countries around the world who have developed a really broad approach to sort of what information they would regard as being acceptable IDs. And, when I think about some of the markets we have been looking at to launch P2P remittance services in, they may have 10, 12 or 14 different types of information that they would regard as, usable for KYC onboarding purposes. But there must be a way in which I think we, as a society that is increasingly, living in a digital world, can make that much simpler, much more consistent, and much more reliable from both users' point of view. And I think the burden obviously would rely on, I think, private entities to be the holders of and the bearers of the responsibility to test that information. But it may well be that we can also be the ones who may end up generating some of the solutions around that. And when you think about the potential that NFTs offer, for example, as a means, I think, of becoming a vehicle for portable digital IDs in an interoperable world, that is certainly something that we're interested in exploring and looking at as we move forwards with our plans for the metaverse, for example.
Thanks, Ed. Valentina, is this also on Microsoft's agenda?
Financial inclusion, especially us working with governments, it's ultimately what needs to happen. And we don't want to enlarge a digital divide, and we don't want to enlarge a financial divide across the globe. And initially, the questions were digital transformation are dependent on internet penetration. That's not no longer the case, and partnering with telco providers and investing in research when it comes to communication has helped cover remote areas around the globe. And if I were to give specific example of projects around financial inclusion that we have supported, we've been working with small companies, startups in Africa, in Kenya specifically, where they've seen that the struggle farmers or food vendors will get to access credit and financial services, standard services. And they've opened a new company, Movas Group, it's called Information and Financial Services, company that provides a loan to typically unbanked population. they just need a smartphone, and based on all the mechanism they have in place, the advanced analytics. This is digital, no paperwork required. And then, yes, there is a risk scoring that's done and assumed. But once you open it to the large market, this risk gets reduced at a wider scale of adoption. Financial inclusion also generates a new business model for the banking sector. Clearbank, it's such an example in UK. They've become, by being cloud native and digital native, they've become the first new UK clearing bank in over 250 years. So the private sector moves fast, and there's a lot that can be learned from that experience. And policy, it's a living organism, I would say, because it started for each of us to protect each of us, and it has to follow our existence and the way we do things. Thanks,
Valentina. I'm just going to get a bit of audience feedback. We're running the poll. We asked the question, are digital IDs the key to unlocking the potential of data to transform businesses and economy? And we have 100% yes vote. So that's good news. We also have a question there that just sort of reminds us that digital IDs are not some sort of like solution for everything and a panacea. And the question, maybe I can come to Kay on this one, is as network-based AIs become adept at creating fake photos, videos, voices, and even in liveness test feeds, how will financial institutions and governments reliably identify fake or bad actors at the root of identity ingestion, enrollment, and validation systems? I'm sure this is something you're thinking about a lot.
We do think about it a lot, and we recognize the issue, and I think that's why we're encouraged by some of these emerging infrastructures around mobile driver's license, where they rely upon the in-person proofing. And we think about, digital identity is tough, right? Anywhere along the chain, you call into question the integrity of the identity. So we are looking at it. We continue to think about it. And remember, ours is a framework where it's risk-based, where we are asking the institution to think about having a program in place. But, we're not just thinking about the threats. If I can be so bold, we're also thinking about the innovation and how you spur it, to your earlier point, right? And I think there are a number of features of digital identity, a digital identity framework, if taken together, could potentially spur innovation in financial services and products across legacy financial systems, digital assets, and emerging central bank digital currencies. Ed was talking about compliance, record keeping, et cetera. We're thinking about digital identities, they need to be dynamic. They need to be updatable frequently, like our mobile driver's license will be. And we need to think about source verification and interoperability. And we're certainly keeping an eye and thinking about what a consumer permissioned ID evidence, stored cryptographically and accessed in a token-based exchange could do. I think, but to that inclusion part that you're talking about, there will always be a need for in-person services. Digital identity is not going to be the panacea. There will be people that don't have access to broadband, that are not comfortable, elderly potential, or me some of the time, comfortable with the digital exchange. And so I think, we're thinking about the fact as you drive digital identity and you address some of the threats that we're talking about with some of these emerging technologies, you then can allocate money more effectively to some of those use cases that digital identity is not going to be the solution for, to really drive inclusion. Because when the US, we're talking about, a small percentage of the population. And when I look at the FDIC's survey on the unbanked, digital identity is the 8th most important reason for which people are not banked. And so I think it's about effectiveness of resources and addressing the threats more broadly. That means that you can drive inclusion as well as innovation.
Thanks, Kate. But of course, US much more advanced economy. In certain economies, this is obviously a much bigger issue. And just from Meta's point of view, are you looking at the potential risks of digital IDs in a similar way to the way that Kay described, and in terms of the question that we had from the floor as well?
Well, I can't really remember what the question from the floor was, but I definitely recognise all the points that Kay identified, and it's certainly true that it is not the be-all and end-all of things, because there will clearly be parts of society where in-person experience is a very real thing, and I certainly hope that remains the case, even if there is a metaverse and everything else. We will live in multi ways, but I don't think we should underestimate the potential for it to unlock things. I mean, India has developed a reasonably light touch approach to increasing digital identity, which has brought 300 million people within financial inclusion in the last 3 years, I believe. It's a really significant and relatively straightforward step, but one that required a really concentrated bit of work to be done by the national agencies in India. And it's an incredibly successful outcome. And I think, you can only look at those sorts of examples, which might not have perhaps been thought of 5-10 years ago as being remotely possible, to see what technology can in fact unlock. So, I would encourage us all to be much more ambitious about this and really push the boundaries.
Thanks. And I have another question from the floor. If the main issue of financial inclusion is banking payment operating costs, doesn't that mean that separating identity from transactions at the transactional level would make more sense than the current process? I wonder if any of the panelists would like to take that one on.
Maybe I'll comment back to the reducing the points of failure and the points of attack that I've made earlier. Keeping it simple and isolating transaction and core processes from these potential attacks, it's important. So the suggested approach, it's a very interesting one. And the technology exists for that to happen, and it will not impact negatively on having still a 360-degree view of what's happening, of applying know your customers mechanism, thinking of the anti-money laundering and financial security aspects.
Thanks, Valentina. Just on the subject of digital IDs, and we talked a lot about, I think more about the private or the personal digital ID. Doug, I know you have some thoughts about the potential for corporate digital ID. I wonder if you might share.
Thanks for that, Clive. And yeah, it's something that on both of these, and my team, we did a lot of work with the Alliance for Financial Inclusion, looking at this idea of what really matters. And what we came to the conclusion that it's a combination of digital access first. Second, that a sovereign biometric identity system is incredibly powerful. And that, when it is linked to access to a bank account, a mobile money account, or a digital wallet, and enabled by interoperable payment systems, that this is really your transformative package. And when you see all of these elements together, you see not only a transformation in financial inclusion, you see significant progress on a range of other sustainable development goals. You also see really that next billion goal, because the cost of customer acquisition goes down dramatically, which enables a range of new business models. So I think we've got a lot of consensus around this individual ID side. But as you highlighted, Clive, what's a lot harder and where there's a lot of potential is on the corporate side. And corporates, if we think about an SME, one of the biggest problems for an SME is often the lack of record keeping. Digital or otherwise. And so that makes it very difficult from the standpoint of giving the data that are necessary, both for KYC processes, but also for credit evaluation purposes. And this is something that we've seen some of the big tech companies in the US and China in particular do very, very effectively, amalgamating vast amounts of data to be able to do something with SMEs that we've always wanted to do, which is a combination of cash flow and reputational based analysis in order to allocate credit. And it works. Now, from the standpoint of corporate digital ID, the challenge is actually, what do you use? If you've got a listed company that is on a securities exchange, you probably have a number that takes you into an EDGAR system in the US, that takes you into a vast amount of disclosure. If we look at the EU, we see the forthcoming ESAP system, which not only brings together all the financial disclosure data, but will bring together all of the ESG disclosure data. But if you're not a listed company, how do you go about it? And what we often find is that companies' registries, which are often the place where the base registration numbers come from, are often not terribly sophisticated in their operations. And they're collecting data, but it's often data on a declarative basis, non-verified, non-evergreen, which means that anyone that is seeking to use that corporate data has to go through their own investigative process. But I think what we are seeing as a result of a variety of different strands is some real movement. We can think about legal entity identifiers in the aftermath of 2008 in the OTC derivatives context. We can think about CRS, the common reporting standard in the context of tax information. And most recently, we can think of beneficial ownership transparency agreements. And if you tie all of these things together to a single piece of identification, it gives you a very powerful hook, which a private company can then tie to vast amounts of other data. But the problem with all of this is so much of the activity is on a cross-border basis. And the challenge is there is very little standardization across these company identification systems in the large numbers of jurisdictions that they are coming out of.
Thanks, Doug. I mean, we have actually an entire chapter of the report that you can download today devoted to SMEs, and I think it makes a very interesting reading. It is interesting to see some regulators really addressing this. Singapore in particular, I think, has taken a very proactive step on this. Our hour is flying by, and we're down to our last 5 minutes. So the other question that we asked was, can regulators successfully work with data collectors and aggregators to strike a balance between privacy issues and the use of data? And this is an encouraging result. 71% said yes. So Molly, maybe I can come to you there and get your thoughts on whether our audience is right to be hopeful and positive.
So I like ending on a positive note, and absolutely, I think there's always reason to be positive about our ability to come together and solve really complex problems. And I do think that we as regulators are recognizing all of the transformation happening and doing things like pulling together. We recently had a symposium on data and connectivity to talk about the practical ways in which this is happening in a way that's consistent with safe and sound banking, and how those things are happening and being solved through various different practitioners, and as well as, and Doug will appreciate this, through academic research and how people are thinking about these issues and solving them. So, that, and, I do think we continue to do things like put out requests for information to really understand how our regulated institutions are thinking about risk and managing risk in this kind of world, so that we, from a regulatory perspective, can, to the maximum extent possible, create this environment where, as you say, Clive, it's less tension between, and as Valentina pointed out, less tension between some of these kind of innovation and controls issues, and more about how we kind of solve both simultaneously. So, I certainly think these are part of conversations we're having domestically and internationally on a regular basis, and I certainly am optimistic about also the public-private partnerships to really dig into these issues.
Great, thank you, Molly. I think we will end, as we're running out of time, on that optimistic note. Thank you to all of the panelists. Lots that we addressed here, lots more that I'm sure we will at OMFIF address in the future. Do please read the report. As I say, you can download it now. We do please stick around for the rest of the day. We have a couple of things going up, a quick break now, and then Valentina, you're back on, and you're going to be talking about open banking and ESG and how to use new technologies for sustainable finance with my colleague Lewis, the editor of the Digital Monetary Institute. And then our final panel of the day will be on technology, crypto assets, and the promise of decentralized finance. And we have Hester Pierce from the US SEC. We have Steve Kokkinos from CEO of Algorand. And we have Timothy Massad, the former chairman of the CFTC, speaking on that. So stick around, enjoy the rest of those. Thanks for joining, and thanks to all the panelists. Thank you very much indeed.